All right, I don't know if this thing's on or not, but what is the deal today? We got Tiff Macklem, whatever, on the Bank of Canada head honch. Let me get rid of these crackers. Link is in the description. It's just starting now. Inflation around the world remains high and broad-based, but in many countries it has receded from its peak, largely due to declines in energy prices. See, Canada with continued easing in global supply chain disruption. Inflation and durable good prices is also moderating. Economic activity in advanced economies has been stronger than expected. Labor markets remain tight. The core inflation has yet to show sustained improvement. With inflation still too high, many central banks have continued to increase their policy rates to slow demand and bring inflation down. So I expect that more. Russia's invasion of Ukraine continued to disrupt commodity markets and affect global economic activity. China's just... and all you saying that there's nothing with these balloons? There's been these weather balloons that are in Ukraine right now, flying over Kiev. In Canada, higher interest rates are working their way through an overheated economy. It remains in excess demand, and this is putting upward pressure on some domestic prices. Labor market is still tight, and many businesses are finding it difficult to attract workers. Well, increase wages. As I was in Calgary for the boom there, and we got all kinds of workers at our company. We paid more. It was easy to get them. just take less profit. But that's, In Canada, higher interest rates are working their way through an overheated economy. It remains in excess demand, and this is putting upward pressure on some domestic prices. The labor market is still tight, and many businesses are finding it difficult to attract workers. Like I said, monetary policy is slowing demand, helping the economy rebalance. Higher interest rates are weighing on household spending, particularly on housing and big-ticket items. As the effects of higher interest rates continue to spread through the economy, spending on consumer services and business investment is also expected to slow further. As well, weaker foreign demand will weigh on exports. Growth is expected to stall through the middle of 2023, allowing supply to catch up with demand on an annual average basis. Growth of gross domestic products, GDP, is expected to slow to about 1% in 2023. That's with the declines in energy prices, improved global supply chains, and a slowdown in demand, consumer price index, the CPI. Inflation is expected to decline significantly this year. Expected, just like it was transitory, CPI inflation is projected to fall around 3%. So the consumer price index is down 3%, but growth is at 1%. And the middle of 2023 will reach the 2% target in 2024. So he's saying that the Bank of Canada has a mandate. There's not many mandates they have, but their mandate is to go out and get 2%. That's it. No higher than 2%. We've been at, 6, 7, it just... They haven't been doing their job. That's why Pierre Poilievre, the Conservative leader, has been calling for resignations. They're saying, hey, you're 4 times you're not doing your job. That's what it is. But it seems to be going in the right direction, but it's a worldwide thing. Inflation back on target. Sustainable growth in Canada economy will resume, picking up to about 2% in 2024. And remember, I'm a plumber, and not just a plumber. I'm opinionated to boot.
To have Governor Macklem here and Senior Deputy Governor Rogers for joining us. This is meeting number 77 of the House of Commons Standing Committee on Finance, and pursuant to Standing Order 108 Bracket 2 and the motion adopted on Monday, November 21st, 2022. The committee is meeting to discuss the report of the Bank of Canada on monetary policy from the 11th from 11 to 12:30, from 12:30 to 1 pursuant to Standing Order 108 Bracket 2, and the motion adopted on Thursday, February 2nd, 2023. The committee is meeting with the Department of Finance to discuss the Select Luxury Items Tax Act of Bill C-19. Today's meeting is taking place in a hybrid format pursuant to the House Order of June 23rd, 2022. Members are attending in person in the room and remotely using the Zoom application. I'd like to make a few comments for the benefit of the witnesses and the members. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. Interpretation for those on Zoom, you have the choice at the bottom of your screen of either floor, English, or French. For those in the room, you can use the earpiece and select the desired channel. A reminder that all comments should be addressed through the chair. For members in the room, if you wish to speak, please raise your hand. For members on Zoom, please use the raised hand function. The clerk and I will manage the speaking order as best we can, and we appreciate your patience and understanding in this regard. So to commence, we do have the Governor of the Bank of Canada with us today. We have Tiff Macklem. Welcome, Mr. Macklem. And also joining Mr. Macklem, we have the Senior Deputy Governor, Ms. Carolyn Rogers. Welcome. So for your opening statement, remarks, and the members then will look forward to asking you questions. Please.
Well, thank you, Chair, and good morning, committee members. I'm very pleased to be here with Senior Deputy Governor Carolyn Rogers to discuss our recent policy decision and our monetary policy report. In January, we raised our policy interest rate by 25 basis points to 4.5%. We also said that we expect to hold the policy rate at the current level while we assess the impact of 8 consecutive interest rate increases since March of 2022. This is a conditional pause. It's conditional on economic developments evolving broadly in line with our forecast. Since the last time we were with you, we've seen some evidence that our interest rate increases are starting to slow demand and rebalance our overheated economy. With inflation above 6%, we're still a long way from our 2% target. But inflation is turning the corner. Monetary policy is working. Avant de passer.
Before we take your questions, I'd like to outline the impact on our rate increases have had so far. I'll explain what we expect to see this year. Finally, I will highlight some of the risks that we take, and the inflation continues to come down and return to our targets. Inflation in Canada has eased but remains high. Annual consumption prices, CPI, inflation moderated to 6.3 in December and peaked out at 8.1 in June. So far, the easing mostly reflects lower prices of energy, particularly gasoline, with global supply chains improving and demand slowing here at home for big-ticket items that people often buy on credit. Prices increases for these durable goods have also moderated. Prices for food and many other services continued, however, to rise much too quickly. The Canadian economy remains overheated and clearly in excess demand, and this continues to put upward pressure on many domestic prices. A broad range of labor market indicators have also shown only moderate signs of easing. Job vacancies have come down a little, but remain elevated. The unemployment rate is near its historical lows, and many businesses continue to report labor shortages. Overall, the restrictive stance of monetary policy is helping to rebalance demand and supply. Household spending is slowing, particularly for goods sensitive to interest rates, such as housing and furniture. Consumption growth appears to have weakened considerably in the second half of 2022. In part, this slowdown reflects the waning boost for the reopening of the economy, but higher interest rates which have contributed.
Time for higher interest rates to work through the economy and slow demand and reduce inflation. That's why monetary policy needs to be forward-looking. Guided by what we've seen so far and our outlook for economic growth and inflation, we think it's time to pause interest rate hikes and assess whether monetary policy is restrictive enough to return inflation to the 2% target. If economic developments are broadly in line with our forecast and inflation comes down as predicted, we shouldn't need to raise interest rates further. But if evidence begins to accumulate to show that inflation is not declining in line with our forecast, we are prepared to raise our policy rate further. In our January outlook, we expected economic growth to be close to zero for the first 3 quarters of the year. With growth in demand stalled, supply will catch up and the economy will move from excess demand to modest excess supply. This will relieve inflationary pressures. We expect CPI inflation to fall to around 3% in the middle of this year and reach the 2% target in 2024. We've already seen a momentum shift in goods prices. For inflation to get back to 2%, the effects of higher interest rates need to work through the economy and restrain spending enough for supply to catch up. The tightness in the labor market needs to ease, wage growth needs to moderate, and service price inflation needs to cool. Inflation expectations will also need to come down, and businesses need to return to normal pricing behavior. If these things don't happen, inflation will get stuck above our 2% target, and additional monetary tightening will be required. There are risks around our projection. Global energy prices could jump again, pushing inflation up around the world. Inflation expectations could remain elevated in Canada, or increases in labor costs could persist. Overall, we view the risks around our inflation forecast as balanced, but with inflation still well above our target, we continue to be more concerned about upside risks. I want to leave you with a few key messages. The decline in inflation since the summer is welcome relief for many Canadians who are struggling to keep up with the rising cost of living. But at more than 6%, inflation remains too high. To fight inflation, the Bank of Canada responded forcefully, raising our policy interest rate from 0.25% a year ago to 4.5% today. That is working to reduce demand and rebalance the economy. We're still a long way from our inflation target, but recent developments have reinforced our confidence that inflation is coming down. And we are committed to getting inflation all the way back to the 2% target so Canadians can once again count on low, stable, and predictable inflation and sustainable economic growth. And with that overview, the Senior Deputy Governor and I would be pleased to take your questions. Thank you.
Well, thank you, Governor Macklem, for those opening remarks. I know members are eager to ask many questions. In our first round, each party will have equal time, that is 6 minutes, and we're starting with the Conservatives. MP Hallen for 6 minutes, please.
Thank you, Chair. Thank you, Governor and Deputy Governor, for being here today. Governor, in January's monetary report, you indicated upward pressures on prices stems from problems such as labor and difficulty sourcing goods, such as building material or food, as you've highlighted today as well. Would canceling domestic policies such as the carbon tax, the escalator tax on excise duties, and the luxury tax, which all have a negative impact on production, as we know, help to ease those supply issues?
Well, on supply issues, I guess I could say a few things. The supply issues that have affected particularly goods prices, many of those are global in nature, and they have certainly been more intense and more persistent than we had expected. But I am pleased to report they are working their way out. You can actually see in the monetary policy report there are a number of graphs that show shipping costs, delivery times, and they're looking maybe not quite normal yet, but much more normal than they've looked for some time. And the other aspect of that is we've seen the demand for goods has, largely with the increases in interest rates, demand for goods, many, especially larger goods, things like houses, furniture, appliances, people often buy those on credit, and so those are some of the first places you see higher interest rates feeding through the economy. And so they've been slowing, so with slower demand and better supply, you actually have seen goods prices roll over. With respect to your specific questions about taxes, carbon taxes, Those are built into our projection. They have effects. Those are built into our projection.
So then would you agree that eliminating those domestic policies, like the carbon tax, would that help to bring down the inflation?
The carbon tax, so the increases in the carbon tax that have been announced are adding about 0.1% to inflation in each year of our forecast.
But we know it's still adding to it. Would you agree that eliminating those domestic policies, including the excise tax, that would help you to fight inflation?
If the carbon tax was not increased, our estimates are that inflation in our forecast would be 0.1% lower in each year.
It would be lower, thank you. And do you still believe, and like you said once before, that inflation in Canada reflects what's happening in Canada today?
Yes, I think the initial run-up inflation was mostly driven by global factors, much higher energy prices. As I just talked about, global supply chains were really gummed up. We see a big surge in demand globally for goods, and all that drove goods price inflation up very rapidly. But about the beginning of last year, so this time last year, service price inflation was actually still about 2% in Canada, but over the course of the year of last year, it rose very quickly, and that largely reflected what's happening here in Canada. The economy overheated. The economy, once we got through Omicron, last year this time we were just coming out of Omicron, and the economy's never really looked back. Nobody could tell us how many waves of this there were going to be. Fortunately, that was really the last major wave. The economy reopened. Businesses were not able to keep up with the demand, and you saw domestic prices increase quite rapidly.
So just in that line, former Liberal Finance Minister John Manley recently was on record saying that the Prime Minister's fiscal policy is fueling inflation rather than resist it. Would you agree that continued government spending at its current rate is working contrary to the Bank of Canada's attempts to address inflation?
Governments, parliamentarians, you have difficult decisions to take. Governments have many priorities. We take government spending as given. So when parliaments pass fiscal plans, we build those into our projections. So those are built into the projection we have. We have inflation coming down to around 3% in the middle of this year. What I will say is that we are acutely aware that high inflation is hurting Canadians, and unfortunately, high inflation affects the most. The more vulnerable members of society.
Absolutely.
They have smaller buffers. Much more of their spending is on necessities. They don't have the ability to cut back.
Absolutely, and we know that as well. But would you say that if spending over the last few years was lower by the government and the fiscal policies, would interest rates not have had to be raised to today's levels?
You can do these counterfactuals. Obviously, the more government spending there is, and it depends what the government spending is on, but if it's government spending that's adding directly to demand, yes, other things equal, you'll get more growth, and in an overheated economy, that will put more upward pressure on prices.
And if the Liberal government continues to spend the way that they are, going through even their own projections, will interest rates have to go up in your estimation?
Well, certainly if demand in the economy continues to run ahead of supply in the economy and inflation does not come down in line with our projection, we've been very clear that yes, monetary policy would likely need to be more restrictive. In other words, yes, we'd have to raise interest rates further to get.
Is there a risk at current levels that's what you'll have to do?
There are certainly risks there's certainly upside risk to our forecast. And if those materialize,
are you afraid that it's because of the government spending going up?
Thank you, MP Hallen. That's the time. And now we're moving over to the Liberals. And MP Baker, please, for 6 minutes.
Thanks very much, Chair, and thank you, Governor and Senior Deputy Governor, for being here. I just wanted to pick up on what Mr. Hallan was asking, and my understanding of what you said in your opening statement, Governor, was that your current projections are for inflation to continue to come down gradually over a year or so towards your 2% target, and that you don't foresee at the moment any further interest rate increases. Did I understand that correctly?
Yes. Well, let me be clear. What we're saying is we've raised rates rapidly. In fact, historically a very rapid pace, taking it from 0.25% to 4.5% in 11 months. And we are seeing the effects of monetary policy working, but we know that monetary policy works with a lag. So the interest rate increases we've already done, they will continue to feed through the economy. So what our assessment right now is it's time to pause and assess whether we've raised interest rates enough. If our own forecast, if inflation comes in line with our own forecast, yes, we've probably done enough. But there are certainly upside risks to that forecast, and if we need to do more, we will.
Is it fair to say there are upside risks and downside risks to any forecast?
There are upside and downside risks, and as we outline in the monetary policy report, we think that the risks around our inflation forecast are reasonably balanced. But I would underline that with inflation still over 6%, we are more concerned about those upside risks. Canadians have been enduring high inflation for too long. We are acutely aware that their patience is running out. The cost, the anxiety of high inflation continues, and it's really important. Inflation has come down from over 8 to a little over 6. It is really important that Canadians see that inflation keeps coming down, and restores their confidence that we are going to get back to price stability.
Okay. I wanted to ask about the role of the federal government in this, in fighting inflation. So the fiscal plan that the government's laid out in the fall economic statement, so the last mini budget, if you will, of the government, would see a continued reduction of the deficit, the federal deficit, and the debt to the GDP ratio, so the ratio of debt to the size of our economy. So at this time, and given these plans that the government has, is the government's fiscal policy, so spending policy effectively, working in line with the Bank of Canada's plans and efforts to lower inflation?
As I said, we really leave fiscal policy to governments and parliamentarians. We take it as given, and then we do what we need to do. The government, what I can say is that through the depths of the pandemic, the government had very expansionary fiscal policy. And monetary policy was also exceptionally expansionary. That was needed. We went through the deepest recession in history. The good news is we've had the fastest recovery. We now are on the other side of that, and we're dealing with the side effects from that. Getting back to the previous question, it will be important. We've built in government plans, and it will be, and those are built into our forecast. If the government, if there are new fiscal spending plans, we'll have to take those on board, and it'll depend what the spending is on. Some spending is mostly adding to demand, and in an environment where the economy's already overheated, that wouldn't be terribly helpful. Other types of spending adds to supply and demand. So, for example, the increased immigration, that adds new workers to the economy. It also new workers also have new incomes, and so you got new shoppers as well. But that's an example of a policy that would increase the sustainable growth rate of the economy without creating a lot more inflationary pressures. So we would certainly be looking at what the spending was on in assessing what we needed to do.
Okay. And do you believe that the provinces should follow the government's lead and restrain their spending to help combat inflation?
Look, as I said, we've got a big enough job in monetary policy here. We're not here to run fiscal policy. I think the one thing I will say there, and this gets back to the previous question, we are acutely aware that inflation is particularly hard for low-income Canadians on fixed incomes, and governments, they're concerned about their citizens, and so federal and particularly provincial governments have been taking measures to try to alleviate the impact of inflation on their citizens. And I think there, I'd suggest that the advice coming out of the IMF is quite good. Look, we know inflation is affecting the most vulnerable members of society. Our job is to get it back down so that problem gets solved. But through that transition, there is a role to help the most vulnerable. The IMF's advice, which I think is good advice, is keep those targeted and temporary. So targeted on those individuals that really need the help, that are really suffering, lower income Canadians, and then temporary so that these measures are temporary while inflation is high. When inflation comes back down, we don't need those anymore.
Thank you, Governor. Thank you, MP Baker. And now to the bloc, MP Samari, please, for 6 minutes.
Merci, Monsieur le Président.
Thank you very much, Chair. Mr. Macklem, Ms. Rogers, thank you very much for your appearance here. It's always much appreciated. We have a very sharp analysis of the economic situation. Mr. Macklem, you noted that last June, 8.1% was the peak of the inflation rate. It's come down to 6.3%, and monetary policy seems to be functioning. As for your forecast, you said that mid-year this year we might be at 3% inflation, and the 2% target would possibly be reached at the end of this year or early in 2024. You explained the upside risks with Mr. Baker in detail. If that were, what would be the ideal situation? I think it would be optimistic, but I'd like to hear you on the other scenarios, potential scenarios. The risk of recession, what are they currently? Perhaps I'd like to hear you from the possibility of having a U-shaped inflation rate with a vigorous labor market and international markets being perhaps more durable, sustainable, and perhaps inflation would rise again towards the end of the year. What are the possibilities of an inflation that would be resistant to change, stay at 3%, let's say, and not come down to the 2% target? Largely as a function of demand on services. And monetary policy might not be able to reverse and return to 2%, but maintain at 3.5%, 4%. Would you insist on maintaining the restrictive monetary policy, or would you wait and see if the economy could, in fact, survive a sustained but higher rate at 3%, 4%? Well, it's a lot of questions there. The first point, you did note that we do have some fairly high upscale risks. But we have to remain humble in our forecasts. Yes, there are risks. Our function and our job is to try to manage these risks. And we don't have a crystal ball. We can't really forecast with total conviction the risks. This is why we're taking a break right now. We're on pause. We've done quite a bit, and we're going to wait and see if this has been enough. We don't want to overreact and slow down the economy and have the inflation rate drop below the target. It's important to maintain, finish the job. Let's get some closure. Otherwise, we won't arrive at the 2% rate. But to return to risk and risk scenarios, upside risk, as I mentioned earlier, we can talk about the downside as well. In the short term, the most significant risk, I believe, is that the price of gas might suddenly increase because of the demand on global markets, particularly with the Chinese economy now is relaunching rather quickly, and this might increase the demand for gas and for petroleum products, and prices could go up here in Canada as well. Since our most recent revision, the price of gasoline has been fairly stable, but it remains somewhat volatile. As for other risks, the prices of goods, and durable goods in particular, is starting to slow or come down a bit. Services stay high, if you will. They continue to climb a little bit. We have about 0% productivity increases in the economy overall, but without any further pressures, if demand comes down, supply will rise, and we'll have a better balance, and the pressures on services will be reduced. But there are still risks. We haven't seen that situation realize itself. We still feel that there are some risks on the service side. Salaries are rising approximately 4 to 5%, and that is not consistent with the 2% inflation rate overall. Unless we get huge productivity gains, which we have not seen in the last few years. Taking a look on the business side, over the recent past period, companies have raised their prices quite a bit, significantly, and they increased them quite frequently. So these changing prices have shifted the whole graph to the right, and we see that it's starting to stabilize. When we talk with business and discuss their behavior, when prices behave more normally, we'll see. We are following that quite closely. Will corporations and businesses moderate the price increases or perhaps even reduce them? Now, if we don't see any downturn in labor costs, if we don't see any normalization of economic behavior, it's going to be much more difficult to reduce inflation, and possibly we'll have to increase rates again. Well, quickly, if you'll allow, on the downside, we could find we have a global recession which is much more severe than we have expected, and that would reduce inflation.
NDP with MP Blakey, and this will be for 6 minutes and to finish off our first round. MP Blakey.
Welcome back to both of you here at committee. Earlier, you had mentioned that obviously oil and gas prices play an important role in determining the overall rate of inflation. And you had said that in respect to the carbon tax, that by your calculation, it represents about 0.1% of the current inflation that Canadians are suffering. I'm curious to know if you can offer us a similar number for the change in oil and gas prices. We've seen significant price increases. We see record profits for oil and gas companies. What share of inflation is attributable to oil and gas price increases?
I don't have a precise number, but I mean, global oil price now is pretty similar to what it was a year ago. So on a year-over-year basis, if you go back over the year, oil prices were much higher. That was if you go back 6 months ago, that was a major contributor to the high inflation that we had, if you go back to say last summer. Since then, that contribution has been coming down, and oil prices today are not that different from what they were a year ago. So that is falling out, and that's one of the reasons why goods price inflation it's actually the most important reason why goods price inflation, which was very high, has started to come down.
So let's put it another way. Like, we've seen inflation come down from about 8.3% at its peak to around 6 or just above 6% right now. To what extent do you think the decline in oil and gas prices over the last 6 months or so, or what portion of that reduction in inflation?
So it is the biggest contributor. Okay. So I mean, just to sort of bring it down to the experience that Canadians have. So I mean, it depends where you are in Canada. If you're in BC, it's more expensive. But if you filled up your car last summer, it probably cost you more than $2 a liter. Mm-hmm. I think the Canadian average is around $2.10, and now I filled up a week ago. It was like $1.55. So I mean, it's that reduction. That's been some relief to Canadians. Unfortunately, food price inflation is a different story. It has continued. Food price inflation is still running 10-11%.
So if we're comparing orders of magnitude, like we could say that a reduction in oil and gas prices has allowed inflation in Canada to come down in the order of about 2%. Not 2% less inflation, but 2% overall. You compare that to the carbon tax we're talking about, an effect on inflation in the order of about 1/10 of 1 percentage point. That seems to be considerable difference in orders of magnitude in terms of the impact of the carbon tax on inflation versus the impact of oil and gas prices in a period where oil and gas companies are making record profits. Seems to me that one is decisively more contributory to inflation than the other. Is that a fair claim?
Yes, I think your arithmetic is accurate.
Thank you very much. I appreciate that. I am curious to know, I know at various times the bank has pronounced on wage expectations of workers and the effect that you believe that has on inflation. But still, I don't believe there's been a statement, I look forward to being corrected on that if I'm wrong, about price increases by companies over and above their increases in cost, which is why in a number of sectors we are seeing record profits. I've talked about oil and gas. There's, I think, about 15 sectors overall that have seen extraordinary increases in their profits. Can we expect a statement from you at any time soon about the role that those extraordinary price hikes are playing in inflation?
Well, I can speak to it right now. So what are we seeing? So if you look at corporate profits, as you indicated, particularly in the energy sector, with much higher global energy prices over the last year, you've seen higher profits in the energy sector. If you look at more broadly, and this gets a bit to the previous question, what we've seen is that, and this has been I would say we have learned something from this. What we saw is with the economy in excess demand, when there were cost pressures, businesses have passed those through very quickly to final consumers, and this unfortunately is a symptom of an overheated economy. When economy is overheated, when inflation is high, when people see prices of everything going up, it makes it easier for companies to raise their prices, because people can't tell, is this just a generalized increase, or is this just this company raising their price? And so what we've seen is that, yes, the distribution of the price-setting behavior of companies changed. Price increases were bigger. They were more frequent. We are starting to see it normalize, and that process of normalization is one of those key things that we're watching to evaluate whether we've raised interest rates enough to get inflation back to target. And if we don't see it continue to normalize, we will need to do more.
And I guess my question is, I mean, if you feel that it's warranted to say to workers that they should limit their expectations around what they take in exchange for what they offer, doesn't it stand to reason that a similar missive is due to corporate Canada to say that they should be mindful in their price setting, that they don't trigger an inflationary spiral? Because they also have the ability to impact expectations of inflation in the way that they set their prices.
I think that's the short answer, Governor.
I think that's what I was just saying. Companies do need to normalize their pricing behavior. That's part of getting back to 2% inflation.
Thank you.
Thank you, MP Blakey. Governor, we're moving to the second round members, and so MP Hallen is up first, I believe, for 5 minutes.
Thank you, Chair. Governor, it seems that in some of the things you said that you're counting on a recession to address inflation, at least a loss of growth over several quarters. In fact, many economists are also expecting a recession in the next 12 months. What would that recession look like for Canadians, in your opinion?
Well, I'll give you a sort of a arithmetical answer, and then I'll give you a sense of what it's going to feel like.
Please be concise. I only have 5 minutes.
I mean, our own forecast is that growth will be around 0 for the first 3 quarters of the year, and as we get later in the year, we expect to see growth to start to resume. So, what that means is that if our forecast is around 0, you could get 2 or 3 quarters of slightly negative growth. You could get 2 or 3 quarters of slightly positive growth. So, I mean, technically, it could be a mild recession, or it could be very weak positive growth. But either way, it's not going to feel good.
When do you expect that?
What's that?
When do you expect that?
We're in the first quarter now. So our own forecasts are that growth will be lower in the fourth quarter than it was in the third. We don't know the last quarter of last year yet.
Okay,
for the first 3 quarters, we're in the first quarter.
What if a recession doesn't happen? Can you effectively control inflation while the government keeps spending?
Well, if the economy doesn't slow down enough for supply to be able to catch up, yes, domestic inflation won't come down in line with our target, and we will have to raise interest rates further.
So if that was the case, would it be better for you if the government capped its spending? Just a quick yes or no.
I'm going to leave, decisions on fiscal policy to governments and parliamentarians.
And if
I will just say, look, if government spending contributes more to aggregate demand at a time when we're trying to cool the economy, that wouldn't be helpful.
Thank you for that. And if liberal inflation spending continues at least at the current levels, and we continue to face labor shortages and a lack of supply, does Canada face the risk of inflation remaining high while growth declines, thereby causing stagflation?
As I said, look, we're going to take whatever governments decide on fiscal policy as given. That's what we've built into our own forecast. Right now, our own forecast has inflation. We've built in all the spending plans that have been announced. Right now, we've got inflation coming down to around 3% in the middle of this year.
But if spending continues, then that would have to change.
Well, if there's new spending that is over and above the spending that we've built into our forecast, and particularly if that spending stimulates aggregate demand without augmenting supply, yes, other things equal, the economy would be stronger.
I don't have too much time left, but I appreciate the answers. As you indicated before, that the government's increase in spending has contributed to inflation, or in your words, it was inflation is homegrown. I just want to know, at any point since June 2020, did you ever warn the Prime Minister, the Finance Minister, anyone in the PMO, or anyone in any finance department that more spending would increase upward pressures on demand and inflation? Yes or no?
I talk regularly, as required by legislation, to the Minister of Finance.
Did you ever warn them?
If she asks me questions,
Did you ever warn them?
Those are private conversations.
Okay, so, but did you at any point? I mean, that's something that could be made public. Did you ever warn them about that?
Really, I largely talk to the Minister about monetary policy. If she shares her thinking and she asks me for my opinion, I give it.
Okay, were you ever worried about the spending in that time? You can tell me that, right?
Certainly, as I've already said, if government spending contributes more than we've built in on aggregate demand,
which it did,
at a time when we're trying to cool cool demand to bring it in line with supply, yes, that would be a concern.
So in July 2020, you told Canadians, quote, if you've got a mortgage or if you're considering making a major purchase or you're a business and you're considering making an investment, you can be confident rates will be low for a long time. Interest rates are now at 4.5, 18 times higher than the 0.25 rate in February last year. You've also admitted your previous statements that there would be deflation instead of inflation and that inflation would be transitory were a mistake. Given this record, what assurances can you give Canadians that efforts you and the bank are taking today will work and not make Canadians' finances worse?
MP Hallen, we are at the time. Governor, I'll give you 15 seconds, but we got to be pretty strict to get through this round. Yeah.
I think the assurance I can give to Canadians is we have acted forcefully. As soon as we saw the momentum in the economy really picking up and inflation rising, we've raised rates forcefully. It's starting to work, and Canadians can be confident that Canadians expect us to get inflation back to 2%, and we're determined to do just that.
Thank you. And now we're over to the Liberals. MP Sorbara, welcome to the committee, MP.
Thank you, Chair, and welcome, Governor and Deputy Governor. Governor, we've in your introductory remarks, you spoke about the imbalance between aggregate supply and aggregate demand. On the aggregate supply things, there are things that the policymakers can and should do. Productivity gains in an economy, putting in place policies, increasing the supply of inputs, one of them being labor. Can you indicate, and I read through the monetary policy report, the impact of policies that are happening on the aggregate supply picture in Canada with regards to labor, namely the implementation of a number of policies, including daycare and the Canada Child Benefit?
Yep. I'm going to bring the Senior Deputy Governor and ask her to take this question. Thank you.
He's worn out. So, what we have seen in the labor numbers is some really positive indications that more women, the participation rate of women in the labor force has increased. We think that should be, it's likely attributable at least in part to improved childcare. We know that is a barrier to women's participation in labor force. It's also probably the case that the more flexible work environment that's coming from 2 and a bit years of hybrid work is also contributing to women's participation. So that policy has helped, as has immigration, helped to bring labor supply into the market.
Thank you. On a different tangent, in the monetary policy report, we look at the nominal neutral policy interest rate. And the last time the assessment was done was in April 2022, and the estimated range is around 2 to 3% currently. When will that reassessment occur? And any indications on whether that range is still within that 2 to 3% range?
So once a year, we reassess our assessment of the neutral interest rate. So our next monetary policy report in April, we will be reassessing what our best estimate of the neutral rate is. I think I would underline that whatever estimate we land on, there's quite a bit of uncertainty around exactly what the neutral interest rate is. It's not something we can observe directly, and the inflation targeting framework is designed to deal with those kinds of uncertainties. So if our estimate of the neutral rate was too low, that means that our inflation forecast would start to come in off what we think, and then we'd have to adjust to do that. But things like the neutral interest rate, they're not like a pandemic that just hits you. Like, this thing probably evolves pretty gradually. So we'll start to be able to see some accumulated errors, and we can adjust. And that is actually one of the benefits of the inflation targeting framework. It addresses the fact that there are these uncertainties that we have to manage.
Okay. A follow-up question. In terms of the output gap, can you remind us again when the Bank of Canada sees the output gap closing? Because it is on the positive side. Generally, in the past, we would say that the output gap is on the negative side and is very hard to estimate. I'm assuming it's still hard to estimate on the positive side, but in a quarter reference, when do we see that output gap coming into balance?
Yeah. So let me answer that in two ways. First of all the indicators suggest the economy is clearly in excess demand. You referenced there's a particularly a wide range of labor market indicators suggest the economy remains overheated. If our forecast is correct that growth is around zero for the first 3 quarters of this year, that gap is going to shrink reasonably quickly, and it's always a little bit hard to say exactly when it's going to flip from positive to negative, because you get small positive or small negative, but our own forecast suggests that would happen sometime in the first half of this year. As I said, it's I wouldn't get too hung up on exactly when it flips. What you really want to watch for is that excess demand really diminishes, because that's what will relieve those domestic inflationary pressures, and that's critical, particularly to get service price inflation down.
Thank you, MP Sorbara. Thank you, Governor. Now we're moving over to the Bloc, and MP Samadi for 2.5 minutes, please.
Oui, merci, Monsieur le Président.
Thanks again, Chair. To the Governor on another track altogether, international. We see that the American growth and activity is causing a rise in the demand, and often this is reinvested in the American capital markets. We also see big tech, Chinese financing capital, which is really quite a game changer. This transformation seems to be accelerated by the war in Ukraine and the economic sanctions on Russia, which is displacing the movement of capital. On the international scene, then, the international financial system presents a rather large risk. What do you make of that? Well, yes, you're correct that there is a lot of uncertainty throughout the world. As for geopolitical pressures, particularly between the United States and China, it's quite clear that these are on the uptick. They continue to be more severe, but we're trying to reduce inflation at its source. And there are risks, of course. If there's a sudden incident of some sort, which would disturb or disrupt the supply chains, we might have some serious problems. I was in BC earlier this year, and I said that over the last 15 to 20 years, the participation of China in the global economy and the repercussions on our supply chains has reduced the inflation rates, particularly for goods, for the trade in goods. In future, it's quite likely this won't continue at this pace. It might actually reverse. The trend might reverse. It's possible that there'll be more pressure on production of goods that require a longer time to provide. And we have to take into consideration this as a factor when we try to target our inflation forecasts. Perhaps we should simply raise what our target inflation rate should be in a certain sense. When inflation is low, Canadians can depend on the fact that there won't be too many changes in their cost of living. If each year it's consistently going up, the cost of living will go up as well. Well, we might be looking at these scenarios in futures, but to have a higher inflation rate, we have to adjust to the realities as we find them. Thank you, Governor, and thank you, Mr. Samadi.
Longer. He gets an extra 30 seconds.
A little, yeah. We allocate for that. So, MP Blakey, yes, please.
You've indicated before that you'll be keeping an eye on government spending and then assessing kind of how various kinds of spending contribute to aggregate demand. So I'm curious to know, and there's a number of examples that I might mention. I'll start with two. One, thing that would count as an expenditure would be if the government were to implement a low-income CERB repayment amnesty so that folks under the poverty line didn't have to pay back CERB debt that they owe. There's a lot of folks asking for this. It's reasonable for government to expect that actually people below the poverty line don't have the money to pay back that debt anyway. There's a significant investment of resources at the moment chasing that debt. Writing it off would count as an expenditure. Curious to know if that is an expenditure that you would see as contributing to aggregate demand. I think there are some very good reasons not to see that kind of expenditure in that light. Second example that I'd like to hear your thoughts on is in respect of investments in affordable housing. Now, obviously, that creates some demand within the construction market, and there's finite resources there, although there are a lot of people in the trades currently unemployed as well, and so the supply and demand is not always a match there, even in the present moment. So while it contributes to demand in the short term in terms of construction resources, and in the medium and longer term, it helps reduce or it helps augment supply to meet demand in housing, and by housing people, it takes people out of competition for market rent apartments or prospective home buyers who land in one of these suites. So how would the Bank of Canada interpret a large investment, for instance, in creating more affordable housing units or in writing off pandemic debt?
I'm going to ask Senior Deputy Governor to take that.
So let me maybe just start by giving you some ideas about how generally to take on our advice about spending, because all members are asking the same question. We publish a monetary policy report quarterly that tells you all of the things that we think are affecting inflation, where we think inflation is going to go, how we've arrived at our decision. We've also now started to publish a summary of our deliberations for each decision. And if you read the summary of deliberations, you can see exactly what are the things that Governing Council discussed as contributing to the path of inflation. So you have a near quarterly update on those things that we think are affecting inflation. As we've said, our current forecast is based on everything we know, including what we know governments, both federal and provincial, are planning to spend. As those plans change, you'll see us feed those changes into our monetary policy report, into our summary of deliberations. So you have this opportunity always to ask us the question, but you also have a quarterly update to our thinking on this topic. So.
Thank you, Senior. Yeah, if you want to just close off, quick.
I would say the first suggestion you made, or the first plan that you asked about, is an example of a very targeted and temporary measure using the IMF framework. The second, the bank has talked for a long time about the need to get to a more balanced housing supply. But again, we would need to take the details of each spending plan on board and determine what effect they would have.
Thank you, and thank you, MP Blakey. And now to the Conservatives, MP Lawrence, for 5 minutes.
Thank you very much, and thank you for appearing today. Just want to go over a little bit of your models. You, of course, had mentioned that inflation has been driven by the fact, as I guess it usually is, that demand has outstripped supply. Now, you had said that you built in the government spending. I assume that you do it based on the government's projection. In the fall economic statement, they projected 2% in growth. If, in fact, in this budget, which is coming up in a couple of weeks, it was more traditionally, which this Liberal government has done, which is a spending increase of 7 to 8%, would that affect your ability to take a pause? Would that affect inflation? Would that affect your models?
Yeah, just to be clear, what we build in. So we do our own forecasts, and we build in whatever agreed spending profile the governments, federal, provincial governments have. So we don't use the government's forecasts. We do our own forecasts.
So what have you projected? Sorry, Mr. Macklem, my time's short. What have you projected for their growth in spending in 2023?
Yeah, I don't have the precise.
Would you be able to provide that?
Just to get to your question, if
I see that as
governments, provincial, federal, spend more than we've built in, and particularly if that spending is stimulating aggregate demand at the same time we're trying to cool
my question,
we would likely have
Mr.
more
Governor, I apologize for breaking, but my time is limited. Could you provide us with what you are projecting your models are for government spending for the federal government in the next 2 years?
If you look, I could certainly follow up with the clerk and get you some more precise numbers. But
sorry, I'll just go ahead. I'll just go ahead, sir.
We have a forecast for government
If you could just provide it to me, that'd be great. If in fact the projected growth is less than what the growth comes in at, meaning that the growth is higher, so it's less than eloquent, would that affect your models? Would that cause perhaps inflation to increase?
So if the growth of government spending is higher?
Yeah.
Yes. I mean, that is something we'll build in, and if it's materially higher and it's focused on things that particularly stimulate aggregate demand, yes, that could have an effect on our.
Thank you for that, Mr. Governor. That's very helpful. In the last appearance, I believe you gave some numbers with respect to the impact that that inflation was having on Canadians, and perhaps that's in the model. But if you could share that with me. So, for example, how much when inflation is at 6% as opposed to 2%, how much that is costing each Canadian and if you don't have the answer right off the top, I'd be pleased to take it already.
I mean, we can. I can certainly, follow up with the clerk and send you some representative calculations. I don't have those in front of me, but I mean, look, what I can tell you is they haven't changed a great deal. I mean, inflation has come down a little bit since we were here last time.
If you could table that, Governor, that would be greatly appreciated.
It's still impacting Canadians.
So one last thing I wanted to clarify. I know my time is probably getting short there, Mr.
A minute and a half.
Thank you. So you did mention the last exchange. I think I assume inadvertently, as you did last time, you sort of miscommunicated a little bit on the carbon tax. Last time you said it was 0.1, which you've talked about, which is the carbon tax increase. Whereas if we were to eliminate the carbon tax, the impact is more like a half a point on inflation as opposed to 0.1. That's significant. So if you were able to bring inflation down, that's a big number. So just by taking the carbon tax off based on your previous correspondence, that would be 0.5%, which would you agree with me that if we were able to get inflation down by 0.5 point, that would have a substantial impact. That would be more Canadians employed. That would be more Canadians who could afford groceries. That would be more Canadians who could afford rent.
So yes, I'll just draw a distinction. So as you said, the increases that are expected or agreed in the carbon tax add 0.1% to inflation each year. If the carbon tax were eliminated, inflation, as you said, would be about 0.5% lower for 1 year, though. That would only be a 1 year effect, because once you've eliminated, you can only eliminate it once. It falls out once, and then the next year it has no effect.
Yeah, but that's to reduce inflation by 0.5 point even for 1 year. That's a massive impact, right? I think you'd be very pleased if we were able to do that.
It's roughly 0.5%.
Yeah. Thank you, Governor. Thank you, MP Lawrence. And now over to the Liberals, MP Chattel, please.
Merci beaucoup, Monsieur le Président.
Thank you very much, Chair, and thank you to the Governor and the Deputy Governor. I was very pleased to hear to what point you have empathy for Canadians and the rough time they're having, and that you were trying to ensure that it be as brief a period as possible. So you recognize their patience, you recognize their resilience, and I found that a very good perspective. I follow the debt to GDP ratio quite often, and when we talk about investment, we must invest much more heavily if we want to compete adequately internationally. What's your comments on the American law to reduce inflation? They want to place, of course, their own interest, the American economy, for the 21st century. Is it reasonable that the Americans are investing very heavily to, of course, set themselves up for top competition status for the future? will that not put pressure on the demand side? Well, those policies, it's not really connected to our monetary policy, but as you have pointed out, the new American Inflation Reduction Act has in fact changed the game rules for competition. Governments throughout the world, in Europe and here in Canada, is closely watching this development in the United States and what the ramifications will be. This might change policy in investment on the private sector and where and in what the investments will be made. It is a significant factor that we have to follow quite closely and see what the impact will be for us, for Canada. And decisions will follow accordingly. We have a carbon tax in Canada. The government they also have instigated carbon capture and storage. So various countries adopt various strategies. It's quite important to continue to keep watching that they are whether compatible, similar, or different. Well, thank you. Thank you for that. You've been there for Canadians who are the most vulnerable. And that is very, very important for us, for the government to be there, to have Canadians back when they need it most. We also have to ensure that in helping and assisting Canadians to get by, we don't make their situations worse with a high inflation rate, for example. When the government tries to finance certain programs, which we have done, we've announced investment in health systems in the provinces. Do we conclude that this was going to put pressure on the demand? I don't think so. Is this a good investment? Is it going to not hinder inflation, contribute to it? Well, look, I acknowledge that you have very tough decisions to make. Population is aging, costs are going up across the board. There are increased demands on our health system, and governments have to judge their priorities and find a proper balance. What is your number one priority? And sort of concentrate on that, focus on that. It's a really tough job. I understand that. Parliamentarians don't have it easy. But we are concentrating on our job here. Thank you. You mentioned the IMF, the International Monetary Fund, anyway. In their recommendations to government, they always insist on the most vulnerable, but targeting it. And it's a temporary measures. It's just to get at them over the hump. We have to be there for all Canadians, but mostly for the most vulnerable. Can you expand on that a little bit? Well, I don't have too much to add on that. It's correct. The most vulnerable have to be protected. We have to find a balance, however. Inflation always has worse consequences for the most vulnerable, the least financially endowed, and the government has a responsibility to protect them. But we can't provoke so much economic stimulus, budget-wise, that it makes it more difficult to reduce inflation. The whole point is to reduce inflation. Thank you very much, Member Cheptel.
You've been very efficient. You've answered many questions. So we have enough time for a third round, members, and we have and if we stick to time, and the Conservatives starting off with MP Morenz.
Governor, I wanted to follow up with you on a series of articles that have been written by Mark Rendell at the Globe and Mail, which I'm sure you're familiar with, where he talks about the fact that traditionally the bank has contributed its earnings to the federal treasury on an annual basis by remitting an amount. Most recently, over the last number of years, it's been about $1 billion a year. Now you've got this odd situation now where you've got billions of dollars sitting in the settlement accounts that you're now paying your overnight rate 4.5% to the banks that were only earning 1% on the bonds you purchased from them before. So essentially the bank for the first time in its history is now in a loss position. Since we last spoke, you've now gone and made an arrangement with the Minister of Finance that she's going to allow you to keep your retained earnings. I guess my question is, would you agree that essentially this arrangement amounts to Canadian taxpayers bailing out the Bank of Canada because of its quantitative easing program?
I'm going to say a couple of things. I'm going to ask the Senior Deputy Governor to explain. This is a very important question. The first thing I want to highlight is that the Bank of Canada does not run monetary policy with a profit motive, and whether we make gains or losses has no implications for the operations of the Bank of Canada or for a pursuit of our monetary policy or financial stability goals. The second point, as you indicated, is that the Minister of Finance has indicated to us that we can basically retain future gains to offset the losses. Every major central bank has engaged with QE. We're all faced with a similar situation. In fact, Canada's balance sheet as a proportion of GDP is smaller than most. This is a good solution, and I'm going to ask the Senior Deputy Governor to say a few words about just the mechanics of it and respond directly to your question.
Yeah, so the cash flow or the mechanics of how this will work is, as you described, it's an odd situation. It's also a temporary situation. So in normal operations in a normal year, the bank would return about $1 billion to government or to taxpayers, as you've described it, for a brief period of time until we run off the settlement balances. We expect we're already down about half, so we expect that'll continue to go down. But for that brief period of time, we will run a loss, and we won't be returning that normal dividend to taxpayers.
How much longer? I only have a limited amount of time. My apologies.
Go ahead.
But how much longer do you think it will take to reduce those balances in the settlement accounts?
Well,
to the point that
we're about at half of where we were at peak, so it depends to a certain degree on the path of interest rates. But
okay, thank you. Now, Governor, I know you seemed to earlier indicate that you were uncomfortable talking about fiscal policy. You said I'm going to leave that to the politicians, but economists have written about this. There is a nexus between monetary and fiscal policy that just can't be ignored by a governor of a central bank. Economists like Neil Wallace, Thomas Sargent have written about this. I'm sure you're familiar with their writings. And in fact, what they've said is that fiscal backup is necessary for monetary tightening essentially to be effective. So I'm wondering if you're concerned, firstly, that budget is coming up. Does it keep you up at night that the government may blow the bank again and increase spending dramatically and throw all your estimates out the window?
So, first of all, we're not ignoring fiscal policy, but fiscal policy is your job. Monetary policy is our job. We take into account the fiscal decisions. We build those into our forecast. Secondly, with respect to what the government will do, we put out our projection. We've built in what they've announced. We've highlighted a number of risks around our projection. That was not a risk that we put. It's not a risk that we highlighted because we think governments will.
Okay, I guess I put
it this way. Okay. Everything I've heard from this government is that they do not want to work at cross purposes with monetary policy. That's certainly the statements they've made.
We can only
Thank you, MP Morantz, and that's time. And now we're moving to the Liberals. MP Nakvi, please, for 5 minutes, and welcome to the committee.
Thank you very much, Chair. Thank you, Governor. Thank you, Deputy Governor, for being here. Thank you for your stamina to endure through all these questions. Look, I'm going to put my politician hat on, and as many politicians, we knock on doors often, as I do in my community, and this is top of mind. Cost of living issues, raises in interest rates. People are regularly talking about these things. The conversation we have been having is an important conversation in terms of technical details, but is really out of grasp of regular Canadians. I want to ask you very directly, in plain language, when people are asking us as to the state of affairs when it comes to cost of living, making ends meet, paying for things, mortgage payments, what's the message that we can deliver to them that they will understand about the future, about things to come, so that we can reassure them that there is things will get better?
Well, thank you for the question. I think there are a few key messages. The first is inflation is coming down. It peaked last summer. It was over 8%. It's now a little over 6%. It's coming down, but we are very aware the 6% is still too high. And 6 is better than 8, but 6 is still too high. We are acutely aware that Canadians continue to be harmed by high inflation. Second message is the Bank of Canada has responded forcefully. We have raised interest rates rapidly. It's working. It is starting to rebalance the economy. Inflation is starting to come down, and over the course of the next number of months, we expect to see inflation come down considerably, so that by around the middle of this year, inflation is around 3%. And the third message is that the Bank of Canada, we are committed to getting inflation all the way back to 2%, so that Canadians can count on low, stable, and predictable inflation in the future.
A quick follow-up. When people hear about a recession, the anxiety level goes up because the past experience around recessions is job losses, etc. We continue to hear about a mild recession, a soft landing. Again, in plain language, what does that really mean for Canadians?
You're right. A recession is economists use it as a sort of a technical word, but for most people, it's a much more emotive word. You say recession, they think big job losses, very, very painful. So we are expecting growth to be around 0. So that does mean that we could have 2 or 3 quarters of a small negative growth. So technically, economists would call that a recession, be a mild recession. What it's not, though, it's not going to feel great. But it is not going to feel like what people think of when you say the word recession. We are not expecting large job losses, a very large increase in unemployment. Unemployment is 5% unemployment is probably not sustainable. Unemployment, to get the labor market in better balance, get inflation down, the labor market is just too tight. It does need to get better balanced. That does mean the unemployment is going to go up a bit to get that balance. But this is still going to be a pretty healthy labor market. This is not going to feel like the kind of recessions that we had in 08 or 81 or 91.
Great, thank you. Chair, I will be sharing my remaining time with Mr. Baker.
Okay, MP Baker, you have 1 minute.
1 minute,
Yes.
okay.
Yeah.
Governor, Deputy Governor, how does our inflation rate currently compare with our comparable colleagues? I'm thinking of G7 countries like the U.S. and Europe.
Well, I mean, across the G7, I think we have got the second lowest. Japan's lower than us. I think we're the next. But what I'd underline is it's too high. It's too high pretty much everywhere. And it is coming down, but we are acutely aware that we've got a long way to go here.
How does our economic growth compare to those same countries?
Yeah, I mean, on both fronts, look, Canada is doing reasonably well on an international comparison basis. Growth has been reasonably strong in Canada. Has been, I mean, if you compare to other countries, one quarter to the next, you're going to see some move ahead. But overall, our economy has performed reasonably well. We've had the strongest recovery on record, and yes, we are dealing with the inflationary consequences of that. But inflation, it's too high, but it's at the lower end of where most of those countries are, and growth has been in the upper group.
Thank you, MP Baker. And now to the Bloc, MP Samari, please, for 2.5 minutes.
Oui, merci. J'aurais deux questions.
I would have two questions. I'll try to get them in as quickly as I can. My first, as your last appearance here, you explained that the competitive mechanism was not working very well because of the price of inputs were being passed on, the cost of them, to the clients, the ultimate consumer. Has there been any change in that particular situation in business-to-business competition? Well, yes, and as I spoke in Quebec City recently, we had a good graph. At least it was a good graph for economists. The shift in the changing of prices. And what we could see is that ordinarily it's pretty much like this. It's the Great Divide. But it was a much gentler curve. It was a much wider dispersal of the prices. Now we've seen some setback. It's becoming more and more normalized. We're in the right direction. We're going in the right direction. There's still a lot of work to do to get back to a normal distribution, and we're looking at that quite closely. Thank you. My final question then. The Central Bank of Australia announced that they're going to remove the pictures of the sovereignty, the British sovereignty on their banknotes. Are we going to do the same? Now, that's a Department of Finance question. We'll answer that. We are more concerned about the safety and security, counterfeit proofing, than who figures on our banknotes. There's no reason. There's no legal reason why we can't continue to have the ones we have with the image of the Queen. Thank you.
Now over to MP Blakey for 2.5 minutes.
Thank you very much. So if the government were to provide a debt amnesty to low-income Canadians who owe for having been ineligible for CERB payments that they received, would the bank interpret that as a fiscal measure contributing to aggregate demand or neutral with respect to aggregate demand?
We have not analyzed that, so I really can't give you an answer. I mean, if that happens, we will analyze it and we'll build in. But I don't know in front of me what the magnitude of that is. So I can't answer the question. It's not something we've analyzed.
Given that the money's been spent, and these are folks that don't have money available to repay, in what way could it contribute to aggregate demand?
Well, I don't know. I haven't analyzed it. I'm not going to give you an answer on something I haven't analyzed.
Earlier, you said that the one-time impact of eliminating the carbon tax would be a 0.5% reduction in inflation. Is that a net amount, or do you think that it's possible that eliminating the carbon tax all in one go could also have an upward effect on aggregate demand?
So that is just purely an arithmetic calculation. So it's what economists would call everything else equal. The arithmetic impact would be, so inflation 6.3% now. It would be 5.8 if you eliminated the carbon tax tomorrow.
Okay, and that's
to the extent that has other effects on the economy.
Okay,
then yes, that would have a second round effect, and you'd have to take that into account. We haven't done an analysis of that.
Yeah. Fair enough.
So I don't know the
answer. If you allowed for the effect of that elimination on aggregate demand, the 0.5% is a maximum possible benefit. It could be lower depending on how people spend the money that they would.
It would depend on what happened, yes.
Yeah. Okay. Thank you very much. And then with what time we have remaining, I'm curious to know if the bank has any thoughts on how spending in the housing market, and particularly building new housing supply by government, affordable units, would be interpreted by the bank in terms of its possible contribution to aggregate demand or not, given that there's, a complicated effect in that it creates demand in some areas over a short period of time, but it also helps alleviate supply problems over a longer period of time. So what are some of the factors that government might consider in order to spend in the right way from the bank's point of view and not have a net higher contribution to aggregate demand?
Well, I mean, I think you've described them well yourself. I mean, we're a little bit into speculation mode here with these questions, which is difficult for us to give you precise answers in terms of what would the overall effect on inflation be. But as you described, a carefully targeted program that built housing for most vulnerable Canadians, for people low income, that's an example of a targeted program. But again, without understanding the construct of any program, it's hard for us to give you a precise answer. What we would say, as I said earlier, is the bank has long pointed to the imbalances in the housing market as a problem, and so adding to the supply of affordable housing would, over the long term, and again on balance, all things being equal, be a good thing for the economy.
So thank you, as a general and concluding statement, Mr. Chair, that not all spending is equal in respect of its impact on the aggregate demand that the bank would be looking to assess post-budget in respect of its decisions about whether the interest rate pause would continue or whether further action on interest rates would be warranted.
Yeah, I think that's exactly what the governor said earlier.
All right. Thank you, MP Blake. And we're moving to the Conservatives MP Chambers for 5 minutes.
Thank you, Mr. Chair. Thank you for joining us again. It's a pleasure to have you back. There are some notable absences at this committee, which we may talk about in the next session. Governor, you talked about the labor market a little bit. It's very tight. In the last 6 or 7 years, the government has added about 12,000 net positions each year, every year, and in fact has just produced additional human resource plans. I'll give an example. CRA's an additional $400 million to spend on staff in the tightest labor market that we've ever seen, and we're trying to build supply to help with inflation. Do you think it's wise that a government is continuing to add people when there's such a pressure on the labor market?
Yeah, look, as I've said, governments have difficult spending decisions. They've got to set priorities, and what we're going to do is we're going to take those into account, and then we're going to do what we need to do. Bank of Canada is set up with operational independence. We have a clear goal, and we have the operational independence to pursue that. The spending plans, the spending the government has done, and its agreed plans are built into our projection. If the government changes those plans, we'll take that into account and do what we need to do.
Fair enough, but on a textbook definition of crowding out, you have almost 1 million job vacancies in the private sector. That's come down a little bit, but just round numbers, it was 1 million for a long time. The government is actually hiring a number of people in the tight labor market. Those jobs, if were filled in the private sector, would increase output capacity, wouldn't it?
Look, I'm going to leave fiscal decisions to you. I mean, governments, whether it's health, education,
fair enough,
CRA, governments have difficult decisions to make, and that's the role of Parliament.
Fair enough. Would getting energy resources to Tidewater increase supply, like the output? Would it help with the output gap issue? We do have as new pipeline capacity comes online, built into our projection based on best available information, we have new pipeline capacity coming online that will contribute to increasing the amount of, that'll get more economic potential,
more oil to Tidewater. That is something that will contribute to growth. It is built into our projection.
Yeah. Currently, there's large wage settlement negotiations happening at the federal level. We know that the private sector benchmarks a lot off of what happens at federal level with respect to wage settlements. Is there, in your mind, what should people be planning for, businesses, the government, in terms of what they think is a reasonable wage settlement offer over the next 2 to 3 years?
Yeah, I'm going to ask Senior Deputy to take that one.
They should be planning for inflation to come back to 2%.
That's it. I mean, some wage settlements at the provincial level have been higher, but not as much as we've seen some of the asks currently at the federal level. So you think it's fair to recommend that people expect inflation to come back down to target within a reasonable amount of time when they're making wage settlements?
That's what we're focused on, and that's our advice to employers, as we mentioned to Member Blakey earlier. It's not our role to tell employers what their wage settlements should be. It's not our role to tell employees what wage settlements they should demand. It is our role to tell both employees and employers that we are committed to get inflation back to 2% and that you can count on that in settling your wage contracts.
Thank you very much, Mr. Chair.
Thank you, MP Chambers. So we're moving to actually our last questioner, which is Liberal MP Baker for 5 minutes, and that will be the end of this round and also this panel. MP Baker.
Thanks very much, Chair. And Governor, I'll ask for your most concise answers possible, as I want to leave a minute, if I may, for my colleague, Madame Chatal. I just want to confirm this for the folks at home. So my constituent in Etobicoke Center or other Canadians who are watching this understand. Like, what I hear you saying, Governor, and I'm not trying to put words in your mouth, but I genuinely just want to make sure we're very clear with Canadians, that you've made a projection to your best ability of what inflation is going to be, that you've taken into account all the various information you need to take into account to make that projection, including current plans for government spending. Based on that, you decided to pause interest rate hikes, and you've projected, as you mentioned earlier today, that the inflation rate is heading back very close to target by the end of the year. Am I adequately summarizing your
with one slight precision? I would agree with you. So we've indicated that. So our current forecast is that inflation will be around 3% around the middle of the year and get back to the target next year. And if economic developments play out as we projected, and in particular inflation comes down in line with that projection, yes, we don't think we'll need to raise interest rates further. But there's a number of things that have to happen for that projection to get realized. And if inflation gets stuck and it doesn't come all the way back to 2% target, we're fully prepared to increase interest rates further to get it all the way back.
Right. So Canadians should be prepared for the fact, I hear you saying, that interest rates you may have to raise interest rates again, but your current projection is for the rate of inflation to come down to 3% by the end of the year and back down to the target of 2% that you're targeting and Canadians are accustomed to next year.
It's a good summary.
And that you've taken into account the best data you have, including current government spending.
Yeah, it's a good summary.
Okay, thank you. One of the things I wanted to quickly ask you about was, we talked earlier about the spending the government did during the COVID pandemic. You and I had an exchange about that earlier. And I think inflation is obviously hurting my constituents, it's hurting all Canadians. But to my mind, if the government hadn't made those investments, I'm thinking about things like CERB, or I'm thinking about things like the wage subsidy. There were approximately 9 million Canadians, for example, who had to take advantage of the CERB. That the economic damage from that, not doing that, from not having programs to support Canadians, would have been devastating to our economy, devastating to Canadians, and is it fair to say that would have been far more devastating than the inflation that we're facing here today?
I think it's fair to say we all faced a completely unprecedented situation. GDP plummeted 15% in a number of months. There were more than 3 million Canadians unemployed, and another more than 3 million working less than 50% of their normal hours. And the real danger, and inflation actually started to go slightly negative. There was a real danger that if the governments of the Bank of Canada did not take concerted, bold action. The most sharpest recession in history could have become a depression. Fortunately, the other part of it is the health response was tremendous. The invention and distribution of vaccines was critical to getting us back to normal. But the combination was we had the fastest recovery on record, and we avoided a much worse outcome. One sort of quick way of looking at it: if you look at the projection the Bank of Canada put out of the depths of the recession. In fact, they couldn't really do a projection because there was so much uncertainty. They provided a band. And if you look at the actual evolution of the economy relative to that band, it's right at the top end of the band.
Thank you. Over to Madame Chatel.
About 1 minute, MP Chatel.
Simplement, je vais tout de suite vous remercier.
Well, first of all, I would like to thank you for your attendance today on behalf of all the committee members. And it's quite reassuring to hear you make these pronouncements to Canadians. The normalization of prices for companies, or if you could perhaps share that graphic that you spoke about. Sure, certainly. It's on the website, but I'll be quite happy to send it off to the committee. Do other countries have policies to sort of incentivize companies to normalize prices? Are there policies elsewhere? Well, from a monetary point of view, if we want to normalize the behavior of market prices, is to resolve the issue of excess demand. When consumers forecast that the inflation is coming down, their attitude to the prices will come down. It's easier to bring prices down. But when the economy is better balanced between supply and demand, the competitive function works much better, and it's a lot more difficult for companies to raise prices because they'll lose market share. They'll lose their consumers.